Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 2nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters and I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. We got here in the United States, not really so much across the pond. We did get Mario Draghi speaking, but at the end of the day, here in the United States, we got a couple of unemployment numbers, not as big as the one that's going to be released tomorrow, which is the non-farm payrolls number, most widely looked at, probably data point of the month. That comes out on the first Friday of every month. So we'll get that one tomorrow, but we got preliminary ones, and we got preliminary non-farm payroll at 1.3%, was expected to be 1%. Unemployment claims, a little bit better than expected, being lower at 245,000, was expected to be 251,000. And then we also got preliminary unit labor cost, which was lower than expected, which wasn't that good. Came in at 1.7%, was expected to be 2.3%. So lower labor costs, not really good, because that is not really showing that labor is able to get higher wages for all intents and purposes. We also got natural gas storage came in at a drawdown of 87 billion, which was more than expected of 82 billion. All right, so then on to the overall markets. We've got the crude oil. Actually, one caveat, actually, if you weren't watching, the FOMC came out and released the interest rate to be unchanged. It also came out a little bit more dovish than what most people were expecting. So that, kind of caused the markets to pull back a little bit, because they don't really want to see interest rates increasing all that much. So anyway, having that said, onto the markets, we got /CL, which is crude oil right here, and it is above that line in the sand of $53.50. It's at 53.83, so just above that value area high. It was able to pierce above that today. It's kind of coming back off just a little bit, but that's going to be a determining factor as to whether or not we see more upside in oil, or if it's going to continue to trade sideways and or down. I think it's going to continue to kind of push its way down a little bit, but that's just based on supply and demand on my eyes. It's not really based on what the funds are doing, so they can drive that just about anywhere. But I think that there's a huge amount of supply in oil and in gas and in distillates, which does not bode well for crude oil. Plus, we are seeing the rig counts continually go up, which means that's going to produce more oil. So just my thoughts on that. Gold tried to come up and test that 200-day moving average that I've been talking about, eyeballing it for some time. Came up short of that and is now coming off just a little bit, up about $10.50 right now. Then with the bonds, they've gotten above that the 9-day moving average that I've been looking at today, but now it's right below that as the equities started rallying after some of those data points, because I think it was really not because those data points were good, but it was more so that maybe it was a red flag for tomorrow's number, that it could come out a little bit worse than what's expected. And if that happens, then obviously the Fed won't be necessarily looking to increase rates. So then on to the Dow Jones. It is in negative territory right now, down about $39 right now. It's coming back. The markets actually are coming back off as we're talking here. NASDAQ down about 14.50, kind of close to the lows of the day, but not at the lows. Again, with E-mini S&Ps well off their lows for the most part, down about $3 or three ticks. This is what I was talking about. On those data points, we started seeing the market rally to the highs, and now the euphoria, I guess, it's kind of started to lift a little bit. We've kind of given back all of those gains, and probably right in the mid-market, right at the value area where the most time and volume has been spent. On to a couple of things that I've done with BMY, ticker symbol BMY, which is Bristol Myers. I decided to go into this because needed to add some long deltas in my portfolio. As you guys all know, I've been talking about this for some time, and this morning when it got above that value area low, it's going to look like it's got some room to move to the upside. Did miss on earnings about a week or so ago, but it wasn't that bad for that massive drop. So I think that Bristol Myers is going to continue to push back up and maybe even cover this gap that we're seeing right here. So with Bristol Myers, I decided to put on a long call spread, and it's got high implied volatility, so I ended up selling a put spread in there. I looked at the call spread, but I think that we have some more volatility to come back off in there. So I went into the March and bought the 47 puts and then sold the 49 puts to collect 63 cents for that. So it fits in line with my rules for that type of trade. Got about a third the width of the strikes on that, selling it. And if we continue to see this market continue up, we're going to see volatility continue to come out of that spread. So that's what I'm looking for Bristol Myers, ticker symbol BMY. Then on to Facebook. I tweeted this out yesterday late in the day. This was my earnings trade for Facebook. Decided to go in there and do it in the February monthlies that expire on the 17th, and did the 124 puts and the 144 calls. So both of those to create a short strangle, and collected $1.60 for that trade. Ended up covering it this morning for 38 cents. So that was a nice win on that one. Was inside the market maker move. I was able to, because of the high implied volatility, get outside of that market maker move quite nicely. So that worked out pretty well. We got earnings going on for today after the close. We have Amazon, Chipotle, Clorox, and Visa. So I'm probably going to definitely be looking at the Amazon and Chipotle trades, and possibly the Visa and Clorox. So follow me on Twitter at Wolfman's blog, because that's where I'm going to throw out what those trades are. And you can follow me if you want to at your own will, but I'll tweet out what I'm doing just so you guys have a heads up on that. All right, tomorrow's webinar is going to be on the put butterfly, so check that out. Go to puttraderstrategies.com. Hour-long video. I'm going to talk about all my rules that go into that to increase your probabilities of success with this strategy. And you have to follow these rules, because the butterfly can be a really tricky one. That's why I've done this large segment on just the butterfly, because I think a lot of people look at the butterfly as a relatively easy strategy to set up. But if you don't follow these rules, you can set up yourself for success. If you don't follow the rules, you'll set yourself up for failure. So follow these rules so we can set ourselves up for success, increase our probability of profit going forward. All right, so check that video out, and if you can't take that, take it easy.